I'm Darren Britz from Tax Consulting South Africa, here to give a tax 101 for foreign nationals living and working in South Africa. The purpose of the video is just to give a brief overview of your tax obligations where you're a foreign national that's recently relocated to South Africa, either to live or to live and work, and really just to kind of explain some of the misconceptions in the media around those tax obligations and try to clarify a little bit on what are those obligations. This short video will be put into three parts. Part one is an intro into South African tax residency. What does it mean to be resident versus non-resident? The second part will be how can you become tax resident, whether on purpose or by accident. And the third part will be just basic examples on how non-residents are taxed for tax purposes. The first thing you need to know about tax in South Africa is we have what's called a residency-based tax system. So we tax residents differently to how we tax non-residents. The key difference is residents are taxed on worldwide income. So what that means is irrespective of how you made your money, where you made your money, that is typically money that you must declare to SARS, our South African Revenue Service, and you must pay tax in South Africa on that money. In comparison, non-residents are only taxed on what we call South African source income. And there's very specific rules in our tax laws around when income will be considered South African source. Typically, as a rule of thumb, as a foreign national with no South African record, no tax number, and for the first time you're relocating to South Africa to live or work, you would be deemed a non-resident for tax purposes. And of course, then there becomes a risk of whether or not you trigger tax residency. Foreign nationals who are working and living in South Africa can become tax resident in one of two ways. The first way is by way of permanent intention to reside in South Africa. So what that means is consciously you have made the decision to make South Africa your home. From a South African Revenue Service perspective, when they assess whether or not you become permanent residents, they don't only look at your intention. They look at the way you live your life, the objective factors, to determine whether or not you become resident. The things they'll look at is such as where do you live, where do you work, where do you hold your passport, where do you vote, where are your family relations, how do you live your life, do you have a golf membership? And the more factors that demonstrate a South African intention to live here permanently, the more likely that you've triggered South African tax residency. The second way of becoming tax resident is if you can show you're not intending to live here permanently, but here for a fixed term, you can still become resident by way of your physical presence in South Africa. So under our law, you can become tax resident in year 6 of physical presence. So what that means is, after spending 5 years in South Africa, in year 6, there's a risk that you become tax resident from the commencement of that 6th year. Now there's 3 tests we look at when it comes to determining whether you've met residency by way of physical presence. The first is we look at the year 6, if you've exceeded 91 days in that year 6. The second part of the test is we look at each individual year of the preceding 5 years. Have you exceeded 91 days in each of those 5 years? And the third leg is we look collectively at those 5 years, holistically, in aggregate. Have you exceeded 915 days over those 5 years? If you've met each of those 3 legs of the test, then in year 6, you would have become tax resident. Just using a basic example of a foreign national living in South Africa, let's assume that person is working and living in South Africa. It doesn't matter whether that employer is a foreign-based employer, offshore, or whether they're working for a South African employer. The same tax consequences would apply. So the first thing we'd expect to see is that foreign national registering for tax with SARS and obtaining a tax number, and then having an obligation to file their tax return once per year. And remember, that foreign national as a non-resident would only be declaring South African source income. So what are some basic examples of South African source income? The most common example is if you're employed, earning employment income, or if you're a consultant, an independent contractor, earning consulting income. The source rule would be, where are you physically located when you render those services? So again, using our example, if you're a foreign national physically living in South Africa and you work from South Africa, you will probably have to pay tax in South Africa on that income. Again, it would not matter if that employer is based offshore, it wouldn't matter if they pay you in a foreign currency, It wouldn't even matter if they pay you into your foreign bank account. The fact that you're physically located in South Africa rendering those services more than likely will deem that a South African source-based income, and you'd have to pay tax in South Africa. A second common example is certain types of investment income. So for example, if you've got a property you own abroad and you're earning rental income, or similarly, you've got certain investments in foreign-based investment accounts, more than likely this income would be deemed foreign source income or non-source income and would not be declared in South Africa or taxed in South Africa. So I think as a third part to the example, what do we do when it comes to the source-based income, which normally you'd be declaring in your home country and paying tax in? Typically, most countries will have double tax agreements signed with South Africa, which explains the taxing rights, i.e. who gets to tax you first. In most scenarios where income is South African source-based, South Africa will have the first taxing right to that income. So for example, if you're employed and you're earning a salary, you must declare and pay that tax first in South Africa. Secondly, you may have an obligation to declare that in your home country, your country of residency. Typically, the treaty between the two countries will explain that your home country must give relief for the South African tax, often known as a tax credit. And that's the way in which you will avoid double tax. Thank you for watching this video, Tax 101 for foreign nationals working and living in South Africa. I hope that gave a basic sense of your tax obligations and potential tax risks in South Africa. Of course, this is not formal advice, and it's extremely important that you get advice from a professional before you determine your taxing obligations. Thank you.